Just going to wait a minute here before I get rolling. All right, I think I can make this short and sweet here. If anybody joins, I will discuss. All right. Just double check my mics and stuff. I think that should work. Okay. All right. So let's keep it short and sweet. So what we're looking at here is the Nasdaq, and it still seems like we're finishing up this wave 4 here. We talked about this last week, where the potential for this to expand to the downside was significant until we started to get 2 or 3 days worth of rally here. So I do think that we are seeing. So let me get this stuff out of the way. I think what we're seeing here is just another like consolidation triangle. Now we did have a breakout here, a breach, but it just looks the pattern itself looks a little bit short, or like short term. Really, I think probably what we're going to see here is a little bit of pattern expansion. So it just kind of seems like that. Sometimes you can see something like an ascending sort of channel. So you can see, sometimes it just depends on like kind of how it looks, but you might see something that's like this for the Nasdaq. I mean, it doesn't really look the same on the S&P, but I'll show you that here in a second. But pretty much, I think what we're seeing here overall is we might see like an ABC, and patterns can be subjective. So you can either see something like an ascending wedge, or like a triangle sort of pattern here. Let's say, for example, we put in a new high here, which kind of extends the trend line up. Now what I'd be looking for is a corresponding move down. So it's sort of like a breach of a trend line, as you can kind of see here. We ended the day where it's probably looking really small. We kind of ended the day here where we had like a back test of this line, and I do think that we will have some sort of buy up tonight. Probably some higher volume for the bulls. But what I expect to see here is sort of like a continuation and like a retest. It kind of remains to be seen yet whether we're going to extend higher, but this is certainly a bullish outcome for the day. It's kind of the bear's game to lose, I keep saying. So what we'll do here is I'll show you kind of the bullish continuation, and then I'll show you the bearish path. Oh, how's it going? I was just talking to myself. All right, so basically all I was doing here was just kind of showing the, I was going to try to keep it short and sweet today, just because you kind of add like a bifurcation point. So we might see some sort of breakout action, or we might see a reversal here. So I'll go over the different scenarios. So right now, it kind of looks like we're still in this wave 4. What I'm kind of expecting to see here, if we do see a continuation, because it's possible we might see some sort of bull trap, but at this point it's probably unlikely. We might see some sort of channel like this develop. It looks, like I said before, well, sorry, you weren't on the call, but it kind of looks a little bit different with the S&P. So kind of what I'm expecting here is maybe a little bit of an extension up higher, potentially getting close to the high here, but longer term this is still a bearish sort of pattern, and that just depends if we get a reversal or not. But from the bullish standpoint here, I still think we could probably head up to about 26,000. I don't know yet if it's strong enough to, or at least the Nasdaq. I don't know if it's strong enough to make a new high, but if the S&P did, then odds are the Nasdaq will. So from a from a just sort of like a gut feel, I guess you could say, um, what I'm thinking here is that you'll see some sort of extension up higher, and if you have open short, something like that, you probably want to consider like a hedge, or some sort of like smaller sort of smaller sort of long punt. January is not typically like a super bullish month. It's kind of a month for like rebalancing and just weird liquidity stuff. But I guess we thought September and October was going to be bearish, with with it being a non-election year, but kind of know what happened with that. So seasonality patterns and stuff haven't really been materializing lately. I think actually the better bullish case to show is the S&P. So the S&P here, yeah, it did make a new high here, but really kind of what we're seeing here is one of these ascending sort of patterns. Now, today in the channel here, I was kind of talking about there's a potential here for this to for this to kind of reverse at that trend line, and it did. But I kind of want to see if there's another test of it, and if there is another test, and then you do see a decent amount of selling, then we kind of know that the top is in for a while. So this is still a longer term sort of bearish pattern. And if I take out some of the trend lines and stuff, you can still see that on its side, it looks kind of like a head and shoulders. Now, typically you don't really see these like longer term, like you don't see like a sideways slanted sort of head and shoulders. It actually does look more like a wave forward, kind of like the Nasdaq. And these two indexes are really peas in a pod. So I kind of think what we might be seeing here is actually like a flat sort of correction, or sorry, not correction, but like just the wave counts in general. I think I was talking about this last week, where we had this ABC, and then if we have another ABC like this, and we go a little bit higher, it still constitutes as like a flat correction. But if it goes more than like, let's say 5% beyond like the latest high, then we can consider it like an irregular, and then it becomes like a more bullish pattern, if that makes sense. So right now, kind of what we're seeing is looks like a sort of a truncated sort of C-leg, but I don't, again, I kind of want to see like a higher high, if that makes sense. So right now it looks a little bit funny, but I do think that you will see some sort of like trend line test here. Sorry, I deleted that. So let's say we do see a continuation here. This looks a little bit more symmetrical, like this, the 7,000. And really, I mean, it's just a number on paper. I think that the bulls are all going to clap themselves on the back and getting hats and shirts and stuff like that. Everything else has kind of been on a tear, so why not? We're close. ES has already hit that 7,000 mark before, so it's not really big news anymore. But I do think that is a pretty psychologically significant high, being at that 7,000 level. So now I guess the big question is, where does it, like where do we think it's going to stop, and then what happens next? So from a I guess bullish perspective, 7,000 is reasonable. If you look at the Nasdaq again here, again, I don't really know if it's got enough gas in the tank here to make a new high quite yet. But I guess kind of like I said before, if the S&P has made a new high, then the Nasdaq might not be far behind. But it has been a weaker index for a while. So just kind of freehand here, what this kind of looks like is oops, what that kind of looks like here is a kind of like another one of these flat corrections where it just kind of stops short here. And kind of like I said before, it's like this little zone here still kind of constitutes this flat correction. It is a little bit difficult when it extends a little bit higher, and you're trying to figure out like, okay, how far is it going to go? I do think that it's easier to use like fib levels for this. So you can see, let's say you've got this, this last sort of like corrective move higher. And one of the reasons why I do think that this is like a kind of like a big flat wave 4 kind of thing is because it did start with this ABC. And sorry, let me change the color. But I think it starts, usually it starts with an ABC, and then you see another ABC, and that's kind of what we're seeing right here. We had that. I think that was kind of like going to the end of December. We had that bit of selling, and then we had this. I don't want to call it a Santa rally because it's not realistic. But I I do think that if we have this climb a little bit higher here, it's going to struggle to get above like this 26,165 level. But for the S&P, that should map to this is like 7,000. If when we do see that, I kind of actually think we might see some sort of trickery here. Like we saw some selling, and I've been seeing some options data that have really been, I don't want to say concerning, but it's been like a reoccurring theme where you see like zero DTE options and dealers that pin the price. And what also kind of like screams out at me is like they're trying to control the price, so they don't have to hedge at these super high levels, or at least like hedge a lot. It's kind of different when you have, let's say, like $1 trillion or whatever, or hundreds of billions of call gamma rolling off the books with normal operations expiration date. But when it comes to these high levels, like nobody wants to get holding ES contracts, or minis as hedges or as dealers when everybody's shorting the top. So it's kind of like you want to try to keep people guessing whether it's going to go higher or not, so you don't get everybody piling on the short train. But also, you might get some sort of short squeeze action. So I think there's a lot of risk management that's being played out right now in the wider market. And I think part of that is just because we are at these significantly, high levels, and it kind of feels like the bull run here is kind of wrapping up a little bit. Just because, again, we've been looking at this for 9 months and some change, and we're starting to see like a lot less buying enthusiasm than we did before. So, with that being said, you can also kind of pick out there's sort of some more ending patterns here, like like an ending diagonal. It's possible you might see some expansion and maybe something like that, but it's still too early to tell because we're still so close to where we had that breakout. All right, so now would like to show the bearish view here because people love to play tricks on retail traders here. When we have these sort of like seesaw kind of moves here. This actually kind of looks like it's trading more like natural gas than actually like indexes. So it's been highly volatile and kind of weird to try to figure out like where the where the good entries are, good exits are. I think I only had a long position up here that got stopped out back in the end of December, and it really hasn't moved much since then. So again, you just kind of want to be careful because if this is like a wave 4 sort of thing, I do expect there to be some sort of revisit to not lower lows, not yet, but when this thing does have its backside of the correction, you could see something like this, this sort of like five wave move down, and typically, I guess when you do see something like that, it might extend a little bit lower and kind of fake some people out. I actually kind of think it looks. I think it actually looks kind of reasonable here, where you could see some sort of like megaphone pattern develop here, where you do have that little bit lower below. Plus, it would also probably test this 200 daily moving average. But this would still be pretty decent sort of move down. So yeah, about 10%. But then what that does though is that kind of confirms that this is like a wave 4 and a larger sort of move. So if we kind of take it up a level, take out some of this junk so we can see it, then it does set up like a kind of a longer sort of longer sort of move like this. So I'll color this a little bit differently. So let's just say, the longer term scenario here, let's say, January and the early part of February doesn't really go well. We could see, this sort of like continuation here. And in my opinion, that would be like the final leg. I was kind of thinking that we might be getting close here now, before we had this ABC down, but it just wasn't super fast. So normally when you see these like larger corrections, things move really, really fast, especially when you're on the backside like this, this sort of pattern here that you'd see. So if you look at it like the S&P, I think that we might get, I don't know if you get like an exact tap on the 7,000 level or something like that, but what I do know is that we're getting these weekly large sell signals from like a DeMark sort of indicator, and really it's just it just calculates on number of weeks that have been bullish, and you get to this point where like you've gone so far where it becomes exhaustive, where like people have already kind of deployed their capital, they're just kind of waiting, markets are grinding, some are taking profits, but not really much is happening, and that's not very profitable for market makers. So a lot of these fun little market things that happen, I guess by design, this to kind of suck in retail traders and other traders really to kind of provide liquidity in the markets for these higher levels. But what you do see after this, like after this consolidation, it does, to be fair, it kind of looks like a little bit of accumulation up here, or like reaccumulation. But again, with like the Schiller PE at 40 plus, at other points in history, it's just due for a pullback. Things are just extended, but that doesn't necessarily mean that it can't continue to go up, right? It is a bubble, we know that, but as soon as we start to get some more systemic risk in the market here, we'll see some sort of moves. So for right now, we're just kind of twiddling our thumbs, waiting for it to grind a little bit more. But I do think that you could see some sort of reversal, where before I kind of drew this flat pattern, you'd see the same thing in the S&P as that I just showed for the Nasdaq. So let's assume we get this move, becomes some sort of like irregular. You still could see maybe like a breach of this longer term trend line, and what that would do is kind of set the stage here for what we might see for probably like the rest of spring. But for right now, I think you'll just see a little bit of turbulence, just because we've had 3 years in a row of just up, really, and historically speaking, it's been tremendous. You truly are living through like historic times, like historical markets. But if this is going to continue for another, let's say, year or two, something like that, you got to have some sort of pullback. It's some sort of large pullback, like a 20-30% sort of thing, and that might be like a bigger sort of wave 4. So for example, I guess how that would play out is you kind of see this, this big drop that we had for all the tariff stuff that we had back in April. We also had this big sell signal here, this weekly sell signal. Same thing with back in June of 24, where we did have this, we did have these decent drops. So that's where I'm kind of thinking that sometimes you get some false signals here, like you get these these other counts, but the A13, I guess pretty much what that means is just like a lot of exhaustion. There's the 9, which is like, we're kind of tired, but A13 is kind of like, all right, it's getting a little bit nuts. Maybe we should dial it back a little bit. So in my opinion, you could see a sort of wave 4 here. Like for example, you might see. Let's see, let's measure that. Okay, so 10%. Yeah, so 10% is reasonable for something like that. And then if you do see a bounce there, you could see this this sort of 5-wave sort of structure, make new highs, maybe 7,100. I think would be reasonable if you do have like a 10% pullback. If you have something deeper than that, then it might not actually be a way forward at all. It might just be the start of a larger, longer term ABC down. But we don't know that yet. And I refuse to, be hook, line, and sinker bearish when there's no reason to be, other than just my own personal biases. um, so long story short here is, we are going through some sort of consolidation. There is some evidence of reaccumulation. So, the bulls are still trying to keep this thing, still trying to keep the party going here. But we're also starting to run into some, more distribution. And, I don't think that we'll see, sorry, I want to be clear, like short term, yes, it does look bullish. So if you have, open shorts and you're tired of watching them evaporate with capital, you can do some hedges. If you're afraid to go 1-to-1 for a hedge, that's natural. You could do something like a 50% hedge on open shorts. But when you're starting to get to like the top of the range for like a wave 4 kind of thing, the odds of us having some sort of reversal where, let's say it does, something like this, you could see like there's a lot better levels to pick up some longs. So personally, for me, for the TGPF portfolio, what I would like to do is, if we do have some sort of, let me clear this out here. If we do have some sort of pullback, so let's say we get just a little bit higher. Let's say we see something like this tomorrow, and this kind of like wraps up the week. I think, depending on how strong selling would be, I would probably do like a 1 to 2 unit long trade down here, just for some action, because in a consolidation zone, I mean, especially with a lot of buy volume trapped up here. Sorry, not trapped. It's really not trapped, but a lot of buy volume up here. I do think that we'll see those levels again. So if you have some sort of deeper cut, you start small. If you have some sort of extra, selling, like let's say you get a deeper cut, something like this, you should still see some sort of return back to the point of control. So the plan short term really is to kind of see if there is any sort of, let's say, maybe 0.5 or 1%, some sort of dip, for some light positioning. And then if it does dip a little bit lower, add to that to improve cost basis, because again, if you have open shorts, then you're really not losing out on any opportunity. You're just trying to play the calculus of, what's a good entry and what's not so good. So right now, I don't think it's a good entry. I just think it's there's a lot of weird stuff going on, like trend lines being tested and rejected and stuff like that. I still remember here, we've got 4 tests at the top, back with 25,850, and now we're getting close again. But if this is another rejection, then there's just not a lot of strength left. So with that being said, that's kind of the I don't want to say the long and short because it's not really that funny of a joke, but that's the that's pretty much the short-term analysis for the indexes, where next couple days still remains kind of bullish. We still might have like a pullback sort of day, like on Thursday, maybe Friday, who knows. But overall, even if we have half of January that's bullish, we still might have the back half of January, maybe like the first half of February be bearish. So, and again, it's still a little bit tough to tell because right kind of where things are at, it's like a bifurcation zone, and we might just see a continuation up to tag to 7,000, and maybe it sells off in a big way. So for right now, just trying to play cautious, because up in the nosebleeds here, it's a little bit tough to navigate successfully here. I think the key is going to be options data. So if and it's been pretty revealing over the last couple of days, where there's the 0 DTE and money market maker hedging flows. They've really been helpful in determining whether like we're going to see a reversal today, or we're going to see some price pinning, stuff like that. It's actually getting a little bit easier to read. So when markets kind of become complacent like this, then you have at least an edge when it comes to that sort of stuff. So if you don't have access to and this is just for the people listening after the fact, if you don't have access to my options channel or whatever, let me know. I'll get you added. I'll send you a link. All right. Any questions? All right. So let's do the yield quick. The yield's just consolidating. Nothing really to see here. I do think that it will jump here eventually. I think I'm going to add another unit of TMB down here when it reaches like maybe 4.1, something like that. Gold's been a little bit weird. This does look like it's making a kind of a larger sort of wave 4 here. We might see like an ABC pullback here, but I'm certainly not shorting gold. These metals are making a nasty habit of jumping up, selling down, by multiple % a day. So it's becoming like crypto. So for right now, I think I would probably just wait if you wanted to do anything with gold, and maybe see if you can target a low or something like that. In the event it does hit, let's say like 42.20, that would be a pretty solid long for like a wave 5. And wave 5 could stretch up to probably even 4,700, if not higher. And you actually kind of might see some sort of like an ending pattern, like an ending diagonal almost. Especially if you get like a lower low there around like 42.20. Silver, kind of the same situation. It pulled back a little bit more than gold, but they're kind of peas in the pod, or peas in a pod. So you just kind of want to watch out for that. I think you probably might see some sort of B wave retrace, and then maybe one more leg down here before it kind of heads back up here again, and then gets ready to make a higher high. For oil, oil's been interesting, especially with all the things going on in the news here, where we had some traction that all of a sudden it just got sold down. But we are starting to see some more buying, and I guess that's a good thing. Breathe some life into that. Longer term here, volume's actually been really, really low up until recently. So it's just one thing to keep in mind here. It kind of like natural gas, like it's the prices have been kind of depressed, but we can see some sort of stabilization here. We've got some big buys. So I think that again, energy is just consolidating. It can be kind of boring for a while, but oil and gas, I think you'll get some sort of if you get some sort of like peace deal with Russia and Ukraine or whatever, you'll probably see some pretty big spikes. Or if you start to see more news with the Middle East or something like that. All right, so let's do SOX. So SOX is just on a screaming tear here. It did kind of reverse right here at this 329 level. That's a common extension level. I don't think it's done quite yet. There hasn't been like a ton of volume yet. So yeah, we do see a little bit of sell action here at like the 329 level, but I do think it'll probably continue up a little bit higher yet. Bitcoin here, I think Bitcoin's probably going to see another kind of test of this 87,000 level, and then probably head a little bit higher. So what I mean by that is like something kind of like this, where you'll see this like proper test here of where it originally broke down back in mid-November. Nvidia, this one's just kind of puttering around. It's not really doing anything. It's got this pretty clear ABC here, and I actually think this looks like distribution. So even though it might head up a little bit higher, I think that 196 would actually be kind of a good point to short. We're starting to also get some sell signals up here. Tesla, sorry, this one looks like it's got a bunch of junk on the chart. This one, I do think I would like to maybe go long here and do some sort of, so I have some alerts here. It's kind of what I think might happen. And then potentially down after that, but really what I'm trying to target here is this one to me, and I know I'm sorry, it's a little bit cluttered, but this one to me actually kind of looks like you will see an ending diagonal here, where like you'll get this sort of move. So I want to be careful not to go nuts, but I do think that there is some money to be made by maybe playing this like wave 5 up here with Tesla. And last but not least, take a look at the MSTR. So we're starting to see some buy action here. We did get some sell today, but you're starting to see some signs of life here, and that's a good thing. I still kind of think it's going to follow this path down here, make one more lower low, but there should be some sort of catalyst for that. There was a news article saying that I guess they're not in danger of being delisted anymore. So I know that was a concern. I think Mr. Nelson, I brought that up a couple weeks ago. So that's good. But still, their fortunes are tied to crypto. So long story short with this is that, we should expect to see a little bit more consolidation down here, but the longer the consolidation lasts, then, the more we should see some sort of, spike after that, or, like a more violent sort of spike. And I'll probably add to the MSTU position to improve cost basis with that, because my shorts were stopped out. All right. So with that being said, it's kind of it for the day. We kind of wanted to just kind of see how the next couple days play out here before making any sort of like concrete forecast for it. But did you have any questions or anything? Anything burning? Okay. All right. Well, cool. Like I said, a little short and sweet today, but hope it was informative at least. So. Okay. All right. Well, I guess let me know if you have any questions. Send me a DM or post something in discussion. And you have a wonderful night. See you later. Bye.